I'm Yaneli, also known as Miss Be Helpful, with another FinCap Friday brought to you by NGPF. The S&P 500 achieved its 42nd all-time high record of the 2024 year in late September of 2024. This means that on 42 separate trading days between January and September of 2024, the S&P 500 closed at a level that was higher than any previous closing price in history. But what does this mean and why should it matter? The S&P 500 is a list of stocks from 500 companies, and this type of list is called an index. The S&P 500 index keeps track of how stocks from the leading 500 large cap companies in the United States are performing. Large cap means that the companies have a total value of more than $10 billion. And these tend to be companies that are well established, financially stable, and they're often leaders within their industries like Apple, Amazon, and Microsoft. Whenever people want to know how the overall health of the stock market is doing, they just check to see how the S&P 500 is doing. Record highs like the ones in 2024 suggest that investors are feeling optimistic about the market and maybe the overall economy too, because it shows that large companies have stocks that are performing really well and growing a lot in value, particularly in sectors like technology. Economists, investors, and even regular people like you and me care about how the stock market is doing because our investment portfolios, like for our 401k or for our college savings investments, are invested in stocks from the stock market. The stock market and the economy do have a relationship, but they are not the same thing. The stock market can sometimes give us the impression that the economy is strong when it's actually weaker. And this also works the other way around too. So this is why it's really important that both of these get considered when we want to be really nerdy and evaluate economic conditions. When the economy is strong, companies generally perform well, which can lead to higher earnings, and that leads to higher stock prices. Also, a strong economy usually means higher confidence from consumers like you and me, and that usually means we'll be comfortable spending more money, which also increases spending and increases company revenues and profits, and that tends to push stock prices up. Finally, the central bank in the United States, aka the Fed, adjusts interest rates based on their economic outlook. And in early September of 2024, the Fed lowered interest rates for the first time in 4 years. Lower interest rates on loans means that people will be more comfortable borrowing money for things like cars, buying a house, and using credit cards to make purchases. That's the kind of thing that can boost economic activity, which could also raise stock prices. So when you hear about the S&P 500 reaching new all-time highs, it's basically a sign of a strong and possibly growing stock market. And if you want to stay informed, then you should probably keep an eye on these numbers.